What is an escrow account? I get asked this all the time, especially when you're a first-time home buyer and you've never had an escrow account. An escrow account is a savings account essentially for property taxes and homeowners insurance. So every year you get a bill that you have to pay property taxes, and you get a bill from your insurance company to pay the annual premium for the insurance. So what is done when you have a mortgage typically is, if you have an escrow account, is we take the total of those two numbers together, divide it by 12, and that gets added to your payment, so that each month part of your payment gets saved, so that at the end of each year or at the end of each calendar cycle, there's enough money in that escrow account to send a check to your insurance agent when your insurance premium is due, and then send a check to the county to pay your property taxes. So that part is nice to have because it's a convenience that's free to you. There's no interest that gets charged on your escrow account. And lenders prefer you have an escrow account because it makes sure that it puts them in control of being able to make sure the taxes are paid, that there's always insurance on the property, as opposed to if you take care of it on your own, then there's a chance that maybe you didn't pay the insurance and the policy lapses, and now the home that is secured with the loan that you've been given is at jeopardy of not having insurance to pay off the loan if something tragic happened, like a fire. That's what an escrow account is. It is required anytime you have less than a 20% down payment, you have to have it. The lender is going to require it, so that's something that you'll incur if you don't put down 20%. If you do put down 20%, then you have the option. You can still have an escrow account, but it is an option for you. Now, what happens each year is that escrow account gets reevaluated. So if property taxes have gone up, then that escrow account needs to collect a little bit more each month to be able to pay that higher amount for you. So that's the only thing. When you get a fixed interest rate loan, that's the only piece of your monthly payment that can change. And so sometimes you get a notice that says, hey, we were short by a couple $100, so we're going to increase your payment by $10-15 a month for that. Sometimes that can be a little bit higher because they will pay the taxes and then say, hey, we paid those taxes for you, but now we've got to get more for next year as well, because if those taxes stay high, then we're basically doubling up on how much we need to collect each month. So sometimes you'll see a jump in that monthly payment to compensate for last year when they paid those taxes out, and then also to collect enough for the coming year. So if you have questions around that, feel free to reach out and let me know. But that's what an escrow account is. Super valuable information to know if you aren't already familiar with it. Any other questions you have mortgage related, feel free to reach out anytime.